Hello and welcome back to Beyond the Deals podcast. I'm your host, Gabrielle Simmons. I am here today with Trisha Murphy from Aslan. What's the full time? I would just say Aslan.
Yep, Aslan Home Lending.
Aslan Home Lending, yes. Thank you for being here with me today.
Thanks for having me. I appreciate it.
Of course. To jump off, I will do a quick mention to our sponsor, Builders Outlet. Builders Outlet is your go-to for cabinets, windows, doors, and trim. They are here in Denver, Colorado, and you can check them out by going to buildersoutletco.com. All right, that's the scripted part.
Of course.
Is the whole thing.
Yeah.
But the rest is just us having a nice chat. So tell us, Trisha, who are you and what do you do at Aslan?
I help people finance their future. So I'm a money strategist, really, at the end of the day. I'm a mortgage broker, by day.
Technical title.
Yeah, typical title, right? But I like to help people figure out how to make their money work as hard as possible for them. So
Financial, or no, you said help people finance their future?
Mm-hmm.
I love that.
Yeah.
That's great.
Borrow other people's money.
Yes.
Yeah.
Buy real estate,
Mm-hmm.
leverage it,
Mm-hmm.
earn some income,
Yes.
and then, enjoy the freedoms that come with that.
Exactly. While utilizing someone else's money.
Yeah.
Don't always put all of your cash down, because we have a lot of people that are putting a lot of money down right now. And it's still cheap to borrow money,
Right.
especially when you're utilizing real estate as the collateral.
Yeah. Yeah. And in the grand scheme of things, like if you have $200,000, let's say, to put down on a home, and you want to put all of that down, but that's like all or most of your savings, like it still is probably a better idea to borrow, use somebody else's money, go to a bank, get a mortgage for the most amount you can.
Yes.
And, so long as the numbers make sense, 6-7% interest isn't super sexy for us right now because we got spoiled with B's and fours.
Got so spoiled with what everybody saw for a couple of years.
Yeah.
So,
But as you know, that's not the norm.
No. And the 6-7% is national average and over the years, right? Historically speaking. So, and still cheaper than credit cards.
Mm-hmm.
And the nice part about it, you can spread it out over 30 years. You can always pay extra if you want to. And you can take that money and invest it other places. So that's a lot of what I try and help people see.
Yeah.
A lot of people think mortgage insurance, if they don't want to put the 20% or more down, which again, I encourage most people not to. A lot of people think mortgage insurance is hundreds of dollars a month. Depends on the loan program, depends on the amount you're financing. But what I can say is if you have good credit, it's actually pretty cheap.
Yeah.
I mean, I just had one that I closed. Her mortgage insurance was $10 a month.
Wow. On what was the value of the property?
Yeah, $130,000. So it was little.
Oh, okay. Yeah.
But still,
Not bad.
no. And she was moving across the country. And, so I was like, save your cash.
Yeah.
Right.
Don't put so much down.
No.
Pay $10 a month. $120 a year.
Exactly.
It's all right.
Exactly. And if you want to, pay it down, you can. There's no one stopping you.
Yeah. Now, how does mortgage insurance work? Because I've heard a couple different things and totally am not that versed in traditional mortgage space.
Sure.
Most of what I do is creative. Yeah. We're doing subject twos or seller financing. And so I've literally only ever had, I think, 3 mortgages. And so I'm not super versed in it. But with mortgage insurance, at some point it automatically falls off.
If it's conventional, yes. FHA, the answer is no. So it's a little different. Yep. I actually just had someone ask me this question. They bought their first home during pandemic time. They got an FHA loan and she said, hey, when does my homeowner's insurance fall off? And I said,
You mean mortgage insurance?
and I said, well, you have to pay your homeowner's insurance forever, right? You want to have that and keep that on because in case you have a fire. We have hail, right? All the things here in Colorado. But her mortgage insurance, I looked up her loan because I didn't do it. We met at a networking event. She and I met at a networking event. So I looked up her loan. It's an FHA loan. So FHA mortgage insurance doesn't fall off.
Never. The whole life of the loan.
Whole life of the loan.
That is wild.
Right.
Unless you refinance.
If you refinance, but if you refinance from FHA to FHA, it still stays on for another 11 years.
What?
Yeah. So it's a great, again, FHA is a great way to get into, right?
Yeah.
A loan and be able to get into a house and have lower down payment. Because of the lower down payment.
Yeah.
Or if you're using down payment assistance or something along those lines, right?
Right.
Typically an FHA program has that mortgage insurance. And so, and again, risk-based insurance. So the more you put down, the lower the insurance is.
Because the lower the risk for the lender.
Correct.
Yep. For the bank.
Yeah, absolutely. So it's just a risk-based piece of the equation, right? So can be a great way for somebody to buy their first home, get in, and then if they want to rent it out in a couple of years, often it does have a lower interest rate with it as well because it is federally backed loan. So,
okay.
Yeah.
Yeah. My very first property I bought was FHA. I think I put like $6,000 down.
Yeah.
And I didn't even know that I had mortgage insurance. Like I didn't know that was, I knew that my mortgage in total, PITI,
right,
was like $780 a month.
Yeah. Which is amazing, right? So
it was a small house in Pueblo.
But that's okay. I'm like, you have to get started though.
Yeah.
Right. So it helps you get started.
Mm-hmm.
So yeah. And with little money out of pocket
right.
often. Right.
Yeah. And if it's affordable, like mortgage insurance really doesn't matter all that much. Even interest rate, like really doesn't matter all that much. It still is better to buy, be a homeowner than it is to rent.
Absolutely.
All day long.
Absolutely. You can't play the game if you don't get off the bench, right? Yeah. So you can't start to think to invest or start to think to do all of the things and dream big without getting into the game. So you have to figure out how to get into the game.
Yeah.
So
that's FHA is one of many types of loans that you do, but you primarily specialize in working with investors and like investor-friendly products.
Yes.
Loans.
Yes.
Give me some of those and what are they called and why would I use them?
Sure. We have so many. So I don't want to confuse everyone, right, with all of the different terms. So the biggest one that we use right now, right? So it changes all the time. The most common one and the one that most people have heard of is called a debt service coverage ratio loan, or DSCR.
Yeah.
Because everybody's like, it's a bunch of letters. That's all I know. So I laugh. It's the one, the one with all the letters. Yes. And that is, again, I laugh because I know exactly what they're talking about, right? So really the basis of the product, amazing type of product, because I don't have to look at your income. I'm actually looking to see, does the property cash flow?
Right.
Does it appraise?
Or will it cash flow?
Or will it cash flow? Absolutely.
Yeah. This was new to me too. I did a DSCR on that same first property I told you about. Like 1 year in, I did a DSCR. And what I had learned about it, I'm now learning new things, and just recently learned that it doesn't have to be currently cash flowing.
Correct.
It can be projections based on market rents and even short-term rental projections of what it can earn as a short-term rental.
Yes.
Didn't mean to cut you off.
No, totally. No, I love it. Help fill in all the blanks, right? Because there's so much to know, and it really is a great product. You can use it for purchase. You can use it for refi. You can use it for cash out refi. A lot of people use it when they are getting out of a hard money loan.
Oh, yeah.
So, and for example, I have a customer I'm working with right now. They purchased their property in cash, and they're like, I really want my cash back. Right. So again, cash is king, right? So, they literally want to get their cash back out. And so we are able to go up to, and in all honesty, this property doesn't ratio. It doesn't actually cash flow. But from a long-term investment perspective, it's a great property.
Right.
And they can get it to cash flow eventually, right?
Okay.
So it doesn't necessarily have to ratio. Lenders like it to ratio, but it doesn't have to. Yes.
Just at a lower amount?
Could be a lower loan to value, could be a higher rate, could be both.
Okay.
Right. So the nice part about working with somebody like me is that we have several, to the tune of, last I knew, of 36 different lender partners on the back end, right? And they're national wholesale investors. It's not a human that we're working with that, that complete the DSCR loan, and they do it different. All of them have different terms, guidelines, ratios, reasons why we work with them, right? So, one of my investors reached out to me today and she said, hey, I know you've got some stuff going on, but I haven't seen anything. And I said, well, your guidelines aren't friendly to my investors right now. Oh. So it's working with somebody that knows the guidelines of each of the investors too.
Yeah. So you can match. You're playing matchmaker essentially.
All the time.
Me as the investor, this is what I need for this property. This is the cash I'm looking to get. This is what cash flows. Match me with the right lender who allows with
whatever. Yeah. Whatever. Yeah. Whatever we need.
And when you say ratio, it doesn't ratio.
Mm-hmm.
So the debt service coverage ratio being if my new mortgage that I'm going to get with you guys is $2,000 a month, my monthly income, in order for it to ratio, right, typically 1-to-1,
correct,
it would need to be $2,000 a month.
Correct.
That gives me a 1.0 ratio. Anything that I earn above that would increase that ratio. And
Yeah. And people don't realize too, it includes any association dues too in that ratio. So that sometimes, and in this instance, that's the whole reason it is showing, because it's a condo in Florida. And condos in Florida tend to have high HOAs, right? Yeah. And again, that's okay. It's just part of the deal. It's in a great area, and it will eventually ratio. It's just not doing it today. So, again, a lot of people don't realize that the association gets counted in that debt service coverage.
Yeah. No, that does make sense. Because a traditional mortgage, it would too.
Absolutely. Yeah. But in a traditional mortgage, we're looking at your income to see if you qualify. In a debt service coverage ratio loan, we're not. So,
right. Just does the property qualify?
Correct. Yes.
Now, how is this different? I've never done a NQM, non-qualifying mortgage. How is that different from DSCR?
So technically, that is one and the same. So non-qualifying just means that it's not one that is backed by Fannie or Freddie.
Okay.
Or VA or Fannie, or I'm sorry, Ginnie, which Ginnie is FHA. I know. Who are these people? All of these people that hand out mortgages, right? Oh, yeah. So anyway, Ginnie, it's GINNIE. So Ginnie Mae, right? Does FHA, right? Yep. And then Freddie and Fannie, those are the two that most people hear about.
Yeah.
Yep. And then the VA, those are QM or qualified mortgages. That means they're traditional lending. So typically the way that I talk to people is they say, are we doing traditional? Or do we need to look at alt doc?
Alt doc.
Yeah.
Alternate
documentation.
Okay.
Right. So literally, right, for my self-employed people, because that's typically who we're talking about.
Yeah.
And I don't care. Right. It doesn't matter to me. I'm very versed in the alt doc or non-QM or, non-traditional lending space.
Right.
So just tell me, right? I claim money on my tax returns or I don't claim money on my tax returns.
I make negative.
Correct.
Whatever.
I had a customer call me and say, I make negative $3 million a year. I said, cool. I don't want to see it.
Yeah.
Right. Doesn't matter. House. Right. No, he actually wanted to refinance a commercial property.
Okay.
And we have a DSCR product to do commercial as well.
Nice.
Absolutely. Yeah. So, it's a great, great product. And to me, less hoops to jump through.
Yeah. Now with both, so NQM is an umbrella term. Okay.
Yes.
And DSCR just fits under that.
Correct. Yep.
With non-qualifying mortgages, none of them can be primary residence?
That's not true either.
Oh, okay.
Nope. So we actually have a no income primary loan. There are 2 investors, and those would be the people that are actually lending the money on the back end, right? There's only 2 in the entire country that actually offer that product or program. You can do a bank statement loan. You can do a 1099, asset depletion, asset qualification. That's why I said there's so many different options out there. So many different options. And non-qualified covers is just a blanket term for that.
Yeah.
So lots of options, but you can also do primary in the non-QM space. And again,
primary, no income.
Yeah.
What do rates look like on that?
They were in the 8s the last one I quoted out.
Crazy.
No. I mean, we are seeing, I mean, they're just higher, right? So, and again, you have to think about it from a risk perspective, right? So if it's going to be your primary residence, but we have no way of verifying that you're going to pay the loan.
Right.
You have no income coming in.
Yeah.
Probably going to be a little bit higher rate.
And now I imagine, so I'm just thinking like, I would like to, let's say, buy a 4-plex in Denver, which is going to be $1 million plus.
Sure.
And I want to buy it and house hack it. I want to live in it in 1 unit, and I want to rent out the other 3. What type of loan would be the most advantageous for me in that scenario?
Oh, gosh. Well, lots of questions. How much money do you have?
No money, right? Like
on paper, totally, right? No, I understand that. Trust me, nobody ever does. But do you have good credit?
Yeah.
Right. Do you have reserves in the bank or somewhere? Okay. Right. Do you have verifiable assets? So again, there's a lot of questions, right? And we're asking these questions, and people sometimes I'm like, I don't actually want to pry, but I kind of have to know, right? Because I have to know which way to point you, right? Or what does it really look like for you, right? So, we can do an asset depletion. We can do a bank statement. We can do any of the
Well, with a 4-plex, could I primarily qualify just based off of the income from the other 3 units?
We absolutely will use that as part of the qualification. Absolutely.
Okay.
Yeah.
Okay.
Yeah.
I want to do that. So we'll have a conversation here too.
Let's do
it in Denver, Colorado Springs.
I was going to say Denver's a little pricey sometimes. Yeah. So it can be a great opportunity. And, I have I work with a lot of investors, right? And I tell people, if you're going to get started, right, the one thing that I advise people if they ask, right, be consistent. Right? My best investors are the ones that are consistent in what they do, how much they spend, and what they expect for returns. So if you can make it work, right? Again, do your homework, right?
Right.
If you can make it work and it fits in your space, probably a good deal. If it pulls you too far out of your space, pause, right? Think about it for a minute, because we see people get in trouble too.
Yeah.
I've got a few right now.
Once you're in, and like you said, the DSCRs are pretty common, especially right now for investors who got themselves in trouble, got fix and flips before interest rates went up, got stuck with these higher interest rates, couldn't sell the properties, or they're sitting for too long.
Correct.
They're paying hard money lenders, now that the property is sitting 6, 8, 10, 12 months.
And the hard money lender wants to be paid off.
Yeah.
And they don't care.
And instead of being foreclosed on, they're like, all right, let me go get a DSCR, even if my payment is kind of high.
Yeah. And I mean, again, DSCR is really not right now. Actually, the rates are 6 and 7, right? 6s, 7s. I actually push people towards DSCR because the DSCR loan actually has lower rates than conventional investment rates right now. for most people, right? So again, depending on your long-term goal with the property.
Right.
Because that also has to be a part of the conversation and part of the equation. DSCR loans, because they are alt-doc, non-QM, whatever you want to call them, they come with a prepayment penalty in most instances. So one thing to be aware of, right, if you are thinking about getting one, is just to make sure that you're communicating what is your long-term plan, right? If I want to sell it in 6 months to a year, DSCR, then you're going to have to look at something that doesn't have a prepayment penalty. They exist, rates just higher.
Or you account for the prepayment penalty out of your potential profits.
Correct.
Call it a day.
Yeah. And depending on the person and the situation. And again, we just kind of work through all of that. So that's where I'm like, there's a lot of questions to ask.
Yeah, there really is. And I think what I've experienced just in working with mortgage brokers myself and befriending, one of my best friends is a mortgage broker in Springs. I found that like just having an initial conversation with you is what we need. Like, I don't have to come to you and be ready. I don't have to come to you and have the down payment. I don't need to come to you and have perfect credit. I need to come to you when I'm thinking about, hey, I want to buy a property. And because you know all the things I don't.
Absolutely.
All I know is I want to buy a property and I want to make some money off of it.
Yep.
Right? And so I'm going to talk to you and you're going to pry. You're going to ask all kinds of questions. We're going to get into credit. We're going to get into paying off my debts. We're going to get into like all of those things. And that actually allows me to create a game plan. Before I ever bought my first property, this is what I went through.
Yep.
She told me no. I was very butthurt. And, she's like, you don't qualify. But then it allowed me to see like a clear pathway. Like, okay, I need to get my credit up 30 more points to get the best rates. Boom, on it.
Right.
I need to set aside this amount of money so I have it in savings. When I go to qualify, it's there. I'm not looking for someone to gift me money. I'm not looking for, it's there.
Yeah.
I also know what type of property I want to look at because that helps you guys narrow down the numbers and
programs, who to talk to, and
Yep. And then it's like, that could actually give us a way better jumpstart in our, especially as an investor.
Sure.
But even as just like a homeowner that wants to buy a place for themselves and their family, you're going to have a much better jump start by having those early conversations with you, as opposed to coming and being like, okay, I'm ready. Like, this is what I want. Let's go.
And I jokingly say and lovingly say, there are a lot of people that just wake up one day and say, I think I want to buy a house. Right?
Yeah.
And you're correct. There's planning and preparation, right? So whether you want to be happy homeowner or investor or both, right? You kind of got to have a plan.
Yeah.
And talking to someone like myself is the first step in all of that, because we are going to help you come up with the plan, right? And we are going to dig into all of the deep, dark spaces. You're right. I tell people, I'm like, we are like therapists, right? Because we do dig into all the deep, dark spaces, and we have a lot of really tough conversations, right?
Yeah.
We don't want to tell you that you don't qualify. We want everybody to qualify.
Because people get butthurt.
Absolutely, they do. And trust me, we just need you to be honest with us from day one, right? Because the thing is that it comes out no matter what.
Yep.
Right? Because a lot of people, I kind of do what's a pre-underwrite on a file, right? And I dig pretty good. I'm a little, FBI investigator back here, right? I know we are. We're really good at it. And so, again, just disclose, right? Just say it, right? Because if I don't find it and we get into the process, the underwriter will find it. And it's a whole lot worse when we get there, right? Than it is if you just tell me up front and we can prep and prepare for it going forward.
Yeah. So. And then you're not looking at maybe losing earnest money on a property that you're under contract on, that you weren't completely transparent about something in your finances, that the underwriter comes back and says, hey, I need you to sign this affidavit that says XYZ because this is what you said. And then it's like, oh, well, I actually can't sign that or prove that because
Because because
and you're under contract on a property, you put down your earnest money already. Now you're getting to where you're outside of your earnest money refund period.
Exactly.
You're screwed.
Yeah, no,
That.
yeah. And nobody wants that, right? Like, we don't want that. I tell people, I work to make a living for my family, but I also work for thank yous and reviews, right? So I want a great customer experience, but part of that starts with the communication in the front end, right?
And you're not mortgage police.
No.
Like, for now, it's not a thing.
But well, I mean, sort of, but not me, right?
Yeah.
So, yeah, I mean.
If I come to you and I tell you, like, on paper, I make negative $3 million, right?
Right. Like the guy. Yes, the guy.
You're not, you don't work for the IRS.
I do not.
The state.
Nope, I do not.
You're not the mortgage police.
No.
You're just here to see if this can work or if it can't work.
Correct. Yeah. And that's what I tell people, right? I get a lot of people that come to me after they've talked to somebody else, right? And I say, okay, so why couldn't they do it? Right?
Good question.
I mean, for example, the negative $3 million man, right? He found me on Facebook. Okay. Why are you finding your lender on Facebook?
Right.
Right? There's a reason for that. Right? We're pretty smart. We have to be, right? Because we have
said no. Why?
Somebody or multitudes of people said no somewhere along the way, right? And he, in the conversation, had admitted that over and over and over. And I was like, great, right? I can do it. I had a path forward for him.
Yeah.
But he was like, that's crazy. I don't like that rate. And I said, sir, you claim no income.
Option. Yeah.
Right. This is what we have.
Yeah. So he decided not to go with it.
Yeah, he wanted to negotiate. And I said, we don't get to negotiate.
The rate is the rate.
The rate is the rate. And
but there's no option to buy it down?
In his instance, no, there wasn't. Okay. The commercial space, again, and this was he wanted to borrow multi-millions of dollars against a commercial property. We had a path forward. He wanted 0.25% less.
Wow.
I was like, this is it. Yeah. Right. So, and sometimes this is it. Yeah. DSCR, just using that as an example, has a different floor rate, meaning the lowest they will go, than regular QM conventional lending. Okay. So you can buy things down differently in both spaces because it's different subsets of servicers that are on the back end. So they say, no, I'm not going below, like, for example, right now, 6.5%. I don't want it. I won't buy it. Nobody is going to take on that loan. So
I didn't know that you could buy down a DSCR.
Yes, you can.
That's awesome.
Yep. And you can get seller concessions on a DSCR too.
Oh, yeah.
Yeah, which a lot of people don't realize that either. So
my partner, Jordan, was explaining something along those lines to me today about how to buy using DSCR, getting money back, utilizing the seller to hold part of the note. I don't know. All of these things. But I'm like, there's just so many ways to get creative.
So many ways to get creative. Yeah.
Yeah.
Absolutely.
And you've been doing this a long time.
A very long time.
How long have you been doing this?
I tell everybody 100 years because some days it feels like that. About 25.
25.
Yeah.
Love it.
Little more maybe. Like, I'm not old enough for that, but.
And let's get into you and your life, your journey. What got you into this space to want to do, to be a mortgage broker?
Yeah. Gosh, I'm like, no one starts real estate as their first career most of the time, right? So unless they're raised in a real estate family. Yeah. My father was a real estate broker owner, owned his own real estate company. So from the time I was 2, I worked auctions with him. Wow. So I have been involved in some way, shape, or form in real estate. I'm an investor myself. We have a family LLC. We own multiple properties. It's just been my whole identity, I think, my whole life. So yeah. I don't think there was a choice. I tried to fight it for a really long time, right? I went to college. I have my master's degree. I wanted to be a psychiatrist at a prison. And I say that mortgages is very similar to that. So, because it's true. A lot of days, again, we're digging into the deepest parts of your psyche, right? And your finances. And again, people feel invaded sometimes, right? So it's kind of like that some days. But yeah, it's been ingrained in me forever.
Hold on. You wanted to be a psychiatrist at a prison.
At a prison.
Why specifically that?
To figure out why people do what they do.
Okay. Yeah.
I love the psychology of people.
Yeah.
So it's always, why are we doing it? I mean, what's the end game, and what does it look like, and how do we get there, and why did you do this? And
that makes sense why you're so good and natural with people, because you understand the psychology. And I think that's super important for all of us in business, no matter what we're in, to at least have a general idea of psychology and understanding why people do what they do, but then also understanding how to communicate with people so that they feel comfortable expressing to you why they do what they do.
Absolutely. Well, and I think that's why I like the creative financing and self-employed individuals, right? They're usually pretty direct.
Yeah.
Right. And a lot of times they're really proud, right, of what they've done, which is awesome.
Yeah.
So you're just trying to help keep that going.
Yeah.
Right. So it's fun to get to be a part of the journey with money. Yeah. So I've always, again, growing up in real estate, I've always liked money. And you have to, right? But money is the thing that nobody talks about. So
yeah, it's like the taboo thing that's like, but those who operate in that space typically are a lot more comfortable talking about it and expressing and being proud of, like, yeah, you know, I make $1 million a year.
Absolutely. Like I said, that man was like, I am negative $3 million, but I make $3 million. And I was like, that's amazing.
Yeah. Right.
But I can't tell the federal government something different than what you tell them if we're going to go traditional lending methods. So that's why we have the all doc.
Yeah. And now you haven't always been in Colorado.
I have not. No.
Where were you before?
Born and raised in Ohio.
Okay.
So teeny tiny town that no one's ever heard of, and you don't need to. I went to a farm school downwind of a pig farm. So
farm school?
Yep. A farm, like in the middle of nowhere, in the middle of a field, literally downwind of a pig farm. One building K through 12.
Wow.
No kidding.
Like 10 kids in there.
Yeah. A few more than that, but it felt that way most of the time. So yeah, and then moved to Indiana for about 15 years, then to Florida for 2, and then we've been here for 6.
Wow.
Yeah.
Ohio and Indiana, yeah.
Yeah.
So do you consider yourself like a country girl?
No, not really. I never fit in. So that was the whole, like, it was time to go. You can ask my mom. I tried to leave for California. I can't tell you how many times, and she kept pulling me back home for some odd reason.
City girl, I want to go out and be in the big city.
Exactly. And just culture and being exposed to different people. Again, I think if you like the psychology of people, right, which I do, you want to be around people that don't look like you, don't act like you, don't think like you, and that was hard to find where I grew up.
Yeah.
So,
because then you have more opportunity to learn. The more you're around people who are different. That's what I love about what I get to do. And I love being able to have people on the podcast that come from so many different walks of life and professions and skill levels, and being able to appreciate that of like, yeah, we're all so different. But I learn something from every single person I have a conversation with.
Every single one. And that's where everybody's like, lending is boring. And I'm like, it's actually not, right? It's not sexy to a lot of people. We try as hard as we can, right? But it's just not. But you know, lending is lending to a degree, right? But again, no two files are ever the same. And so people are always wanting a blanket answer.
Yeah.
And it's so hard. And I'm such a logical and literal sometimes person, most of the time. And so it's hard for me to give just a blanket response to things because I'm like, well, that depends.
Oh, you know what? I was just thinking like we should like create, if this isn't already a thing, it's probably a thing, like a chat GPT, but for mortgage brokers that you could be like, but like a flow chart that shows like, if this, then that.
Right.
If this applies, yes, okay, then this. If this applies, no, then this.
And I tell people that's exactly what it is, right? It is if this, then that, right? And so that is why we ask all the questions, right? Because if it's, I claim money on my tax returns, right? We're always going to try and take you conventional financing first, right? If that's what makes sense.
Right.
But if it's not, right? If this, then that, right? We're moving into a different space and then we have to figure out what that looks like. So it's always, I wish we could have a flow chart. I wouldn't even know how.
Years.
Oh my gosh. Oh my gosh. And we do have we actually have at our
Aslan.
office. Yeah. We have our own internal chat GPT that we have created with our investors, our rules, our guidelines. But the thing that people don't realize either, per loan, right? There can be 1,000 pages of rules, right? So that's where when we're working with our realtor partners or our financial advisor partners or our investor partner, we're like, please don't try and know, right? Please don't try and guess because some days we don't know, right? Because they can change the rules. I mean, there were a whole bunch of new rules that just came out this morning. Yeah. So, if we don't know and we do it 24 hours a day, 7 days a week, 365 days a year, you're probably not going to know, right? So
no doubt.
Just leave it up to us, right?
Leave it to the professional.
Exactly. Hand it on over and just tell us what we need to know. So,
and it's free. Like
totally.
You and most mortgage brokers offer consultations for free and will at least help us like get a game plan, get an idea of where we stand, what that path forward looks like.
Absolutely.
And that's super helpful.
Yeah. And, most of us, right, are also 100% commission. So, I laugh because people are like, you're working against me. No, I'm on your team. Right. Like, this is work. Right. I want this to work too. Nobody wants to do all the work and not get paid at the end of the day. Yeah. Right. So, I think it matters who you work with.
Yeah.
So.
No doubt. That's why we're happy to have you here. Because you're so great with everybody. And at the events, people just love talking to you. And you're also not like salesy.
No.
You're like, hey, here's what we got. Here's what I can do. Here's what I know. I'm an investor myself. I know a couple things.
Just a few. Yeah. Been around for a minute. Again, I don't like to admit my age, but I've been around for a minute. I've seen a few things. Yeah, I've seen a few things. So, but no, I mean, I don't want anyone to feel sold, right? Again, I look at everybody I work with as I want you to be able to see me at the grocery store and look me in the eye, right? I also want you to send your friends and family, right? Like that's really how I've built my business. So I want you to trust me with your parents or your children or your best friend. So if that's how I operate, I feel like I should be okay.
Yeah. And it comes back. You get those referrals, you get those relationships. And since you've been in Colorado, you've been growing and expanding your network here. And
yes,
I hope it continues to be lots of growth for you.
Yeah, thank you. Thank you.
Of course. I guess we can wrap up. If there's anything else you'd like to share with the audience, please do. But otherwise, if you could tell us where to find you.
Yeah.
And feel free to share any of your socials, phone number, whatever you want to share.
Absolutely. So phone number is 720-780-1292. I'm at Mortgages by Murf on all of the socials because that has been my nickname for 20 some odd years.
Murf.
Yep, Murf. Yep, Murf because of the Murphy. So Mortgages by Murf. And then it's Trisha M at aslanhlc.com.
Love it.
So
love it.
I'm around all over.
Yeah. And you're putting out all kinds of fun content on Instagram and stuff now. I've been seeing your videos. They're so good.
Thank you. I appreciate it. I have an amazing marketing person.
You do.
I'm like, I wish I would need her info. I was like, I can give that to you. She's amazing. Because I don't help much, honestly. She just tells me what to do and I just do it. So
that's great.
Yep.
That's what I need.
Yeah.
Because I'm like, I don't want to think about doing all the things, but just tell me what to do and I'll do it.
Yeah. I think, again, for a lot of us, we didn't sign up to be social media moguls, right? So
dragged into it.
Right. We get dragged into it. And again, some people absolutely love it, right? And that's great. I just do what I'm told because I don't want to focus on that. So again, I want to help people make money, right? So for me, I want to focus on the numbers. So if she says, hey, have somebody film you doing X, Y, Z, that's what I do.
Yeah.
So yeah. And she's phenomenal because she comes up with all of it. So
I love it.
Yeah.
I love it. I will get her in.
Yes.
Well, thank you again, Trisha, for being here with us. Thank you for being a valued affiliate with Real Estate Dealmakers.
Thank you.
And we're going to have a fun appreciation party for you guys in August.
Awesome.
That'll be exciting. But yeah, that does it for this episode, y'all. Check us out next time on Beyond the Deals. Peace out.